The Wyckoff selling tests for distribution offer a detailed approach to recognizing when a stock is likely in a distribution phase, signaling a potential transition from an uptrend to a downtrend. The first indicator in this process is the upside price objective being accomplished. Calculated on a point and figure (P&F) chart, this objective represents the likely peak price level, and once it is achieved, it suggests that a potential top may be forming, as the stock has reached its projected target. The next key signal is bearish volume activity. Here, volume noticeably decreases during rallies and increases during reactions, indicating heightened selling pressure. This volume pattern, visible on both bar and P&F charts, contrasts with the bullish activity seen in uptrends and suggests that large investors are offloading shares as demand begins to wane. Preliminary supply and the buying climax mark the initial stages of the distribution phase, where significant investors start selling into the remaining high demand from the public. These events are visible on both bar and P&F charts and signal the start of distribution, as professional investors strategically exit their positions in anticipation of an impending downtrend. Relative weakness against the market is another important indicator. During distribution, the stock exhibits greater sensitivity to declines and lags during rallies compared to the broader market. This relative weakness, visible on bar charts, suggests that demand is fading and that the stock is reacting sluggishly, indicating a possible shift in trend. A break of the upward stride further signals this shift, as the support or uptrend line is breached. This penetration, observable on both bar and P&F charts, reflects weakening demand and serves as an early indication that the stock may be preparing to reverse direction as the distribution phase intensifies. The formation of lower highs reinforces this bearish outlook. As each successive high is lower than the last, it indicates that buyers are less willing to pay higher prices, supporting the idea that selling pressure is dominant. This pattern, visible on both bar and P&F charts, confirms the weakening demand characteristic of the distribution phase. Similarly, the appearance of lower lows serves to further validate the distribution trend. As each subsequent low dips lower, it reflects a stronger selling presence and provides additional confirmation of the shift from accumulation to distribution. Both bar and P&F charts reveal this descending trend in lows, highlighting the dominance of supply over demand. The formation of a crown pattern, a lateral price movement resembling the shape of a crown, is another key visual indicator of a top. This pattern, particularly visible on P&F charts, suggests that the stock is in a consolidation phase at elevated prices and may be preparing for a downturn, reinforcing the distribution hypothesis. Finally, a favorable downside risk-reward ratio supports the strategic appeal of shorting the stock. The estimated profit potential for the downside should be at least 3 times the risk if the initial stop order is triggered. This positive risk-reward ratio, derived from both P&F and bar chart analysis, provides a compelling rationale for entering a short position, aligning with the anticipated decline in stock value. Each of these Wyckoff selling tests for distribution allows traders and analysts to systematically identify when large investors are offloading shares, signaling a likely trend reversal. By recognizing these indicators, market participants can position themselves for potential downside movements, taking advantage of the shifting dynamics from demand to supply.